I've heard rates are dropping, and if I refinance my house, I could lower my payment by hundreds of dollars. Well, my name is Kris Krohn. I've transacted over $2 billion worth of real estate, and today's video is going to be all about refinancing, because through 2024, guess what? The Fed is looking at a total of 6 rate drop opportunities. How much are they going to drop by? How much money could you save in a refinance? And when is the moment to do it to make sure you don't do it too early? All right, you and we're going to have this conversation on refinance. First of all, get on the same page. What is a refinance? A refinance refers to the process of revising or replacing the terms of an existing credit agreement, usually as it relates to a loan or a mortgage. Bottom line is, if you own a house and you have a mortgage, meaning you owe money to the bank, you're basically saying, can I renegotiate that because rates have gone down and I think that should translate to a lower payment. When someone decides to refinance a credit obligation, they seek to make more favorable changes to their interest rate, their payment schedule, or other terms outlined in the contract. Now, here's why this is a really, really big deal. I want you to imagine for a moment that we might experience up to 6 rate drops in 2024. Already a few weeks ago, when the rates dropped just once, guess what happened? There was a scurrying of mortgage applications, an increase of 2.5% of people that said, is now the time for refinance? And it's like, hey, rates drop, maybe you're gonna save $50 or $100. And believe it or not, there are people that are living paycheck to paycheck that are like, I'll refinance like my house if that means every month I can save a Benjamin. But here's what you're not thinking. You're gonna pay thousands of dollars for that refinance. And then guess what happens next month or two when the rates drop again? It's like, well, you could save another $50. Do you wanna refinance again? And then 2 months later, they're like, well, the rates just dropped again. Wait, the rates just dropped, the rates just dropped, the rates just dropped again. You're like, I refinanced 5 times and it cost me $40,000. You are in a worser situation, which means we need this video and we got to talk about strategy when it comes to the game of when to refinance. First of all, why might someone consider refinancing that many times? Well, they're like, I can save money every time. I didn't really know there was a cost to the refinance because it gets wrapped into the mortgage. And so you're just thinking, I should just be focusing on saving money. But the reality is, if a refinance costs you $5,000, $7,000, then if you're saving $100 every month, it's like, well, I'm going to save $1,200 the first year. It might be 6 years before I actually even pay off the cost of that refinance. So on the one hand, having the lower payment feels good, but there is a long-term cost to that, which means you want to be strategic. And the reason why once rates drop, people just pounce on a refinance, even though they might drop again, is because their scarcity fear-driven mind says, what if rates go back up? Because guess what? Don't you remember 2021, 2022? The rates just kept going up. They held strong and even went up in 2023. Like, we're going to experience that all over again. And it is fear and scarcity that will have someone jump way too early on a refinance for getting a small gain, when if they wait a little bit longer, there's a greater gain. Let's give you a real world example, because right now we are ending 2023 with a national median of $430,000. And my prediction, as rates drop through 2024, I think there's a very high likelihood that by the end of 2024, that we may see that national median go up to $500,000. Which means I have a $430,000, we'll call it average price point nationwide right now. And by the end of the year with all those rate drops, it could be $500,000. That's a $70,000 increase. So let me show you the power of refinance. Because according to CNBC and UBS, they're both simultaneously predicting that in 2024, we'll see a drop of 275 basis points. That's 2.75%. So based on that, let's do an example. Let's just say that you currently owned a home at the median, $430,000, and let's say you had today's interest rate of 7.5%. Well, $430,000 home, today's interest rate of 7.5% means that you have a mortgage payment of $3,000. Now let's fast forward 12 months from now, and let's just say that the national median is $500,000. Let's just say that's what your house is worth right now, but you could actually refinance to a rate 2.5% lower. Not the full 2.75, we'll just call it 2.5. So you refinance it from 7.5% to 5%. Well, on a $500,000 home, a home that costs you $70,000 more dollars, but at a lower interest rate of 5%, your payment has gone from $3,000 and is now dropped to $2,700. That's right. Your house costs 70 grand more and your payment is $300 less a month. That's the importance of the game of refinance. So you have to understand there are different reasons why people want to refinance. By the way, if you're really liking this video and you're like, oh my gosh, I wish Kris Krohn could be my financial mentor. I want to invest in real estate with him. I want to ask him questions. I want to learn from him. I got news for you. This is my cell phone. You can text me directly. We can have conversations with each other, really about everything. But the truth is, I really like talking about money. So whether we're talking about a refinance or getting a home equity line of credit, or you're like, Kris, what if I wanted to pull money out of my house or a 401k and invest it in real estate? Those are conversations that I call financial game plans. And it's a plan on how you financially elevate your financial situation by basically playing the opportunity cost game of this or that. It's like, well, if I do this, I get this, but if I do that, I get this. And if you like that game, shoot me a text at the phone number that you see right here. We can have that conversation. So understand there are different reasons why people refinance. It could be to lower your interest rate. It could be to shorten the term of your mortgage. There are some people that are like, I hate mortgages. It's like Scrooge, bah humbug. I want to go from a 30-year mortgage to like a 15-year mortgage. We'll talk about that. You may want to convert to what's called an ARM, an adjustable rate mortgage, where it's like, hey, a bank just came out with a product saying that for a period of time, they're going to artificially lower my interest rate. That would actually give me some breathing room, so I might want to do that. Or people are getting a refinance because they're going to do what's called a cash out refinance. This is where they say, well, I got equity in my house. Like, my house is worth $500,000 and it's kind of half paid off at $250,000 because I bought it for a really low price and I've been paying it down. And you might say, I want to refinance onto a lower rate, but I want to pull some cash out and increase my mortgage, because guess what? There are things that I can do with $70,000 or $100,000 or $200,000, like investing in real estate with Kris Krohn, or I could buy a franchise or buy a business or start a business, right? Here are the things that I want to help you bear in mind. Refinancing can be a great financial move if it reduces your mortgage payment. Also, keep in mind that refinancing is not free. Getting a home equity line of credit with a credit union, that doesn't cost you money. But an actual refinance can often cost you 2, 3, 4, 5, 6% of actually what you owe on the entire house. Like, it can be thousands of dollars. And the last tip I'd give you is that a savvy homeowner is always looking for ways to reduce debt, build equity, save money, and ultimately and eventually eliminate their mortgage payment. Now, if you've watched one of my other videos right over here where I talk about why you should never pay off your mortgage, it's because after I get close to paying off my house, I like to pull cash out of it and I buy more real estate, because for me, more real estate is more gooder. Here's a couple more things I want you to be aware of. Let's just say hypothetically that rates are going to drop 6 times in 2024. Well, it's important to make sure that you do your refinance when there's a tangible improvement. And I want to define that for you. A tangible benefit would be, my rate was 7.5% and I refinanced at 5.5%. You just drop your rate 2 full points. That means that your payment is going to go down substantially, and that's probably going to be worth it even when you factor in the cost of the refinance. That has what's called a tangible benefit. I saved $400 a month. But let's talk about a scenario where you don't get a tangible benefit. The rates drop 0.5% and you're like, oh my gosh, I can go from a 7.5% rate to a 7% rate and I'm gonna save like $75. Let's do it. But then over the remainder of the year, rates dropped another 0.25%, 0.5%, full percent, 0.5%. You'd have to kind of refinance again. There's gonna be a lot of people out there that are gonna perform what I call the premature refinance maneuver. Don't Google that. It's kind of scary what happens. And bottom line is, you're refinancing too early. Right now, I would recommend waiting. Read the current events, make sure you're a subscriber on my channel, and look for when we're getting closer to the rate actually bottoming out. It's not like it's going to all of a sudden shoot right back up. It's gonna go down, it's gonna stay down, and it's gonna float in an area. And so I think the hardest part of 2024 is going to be waiting on that refinance so that you do it strategically. The second piece of advice that I would give you is that it can be tempting for you to consider not just the rate, but the term. And it's like, well, Kris, if I go from a 30-year mortgage to a 15-year mortgage, then my house will be paid off in like half the time. And you're like, that's probably a good feeling, especially if you follow Dave Ramsey, but you do need to be aware that it is going to jack your payment up by like 40%. Like if you're used to a $2,000 payment, your payment might be like $3,200. And so there's a lot of people that get really addicted to that idea of paying off their house. I actually go the opposite direction. I'm waiting for the normalization of a 40-year mortgage. When we go from 30 to 40 years, like, geez, Kris, you're saying that I have to wait an extra decade to get my house paid off? I'm like, yeah, it's because they're gonna lower the payment. And if you're an investor, lowering your mortgage payment increases your cash flow. Because if I'm renting a property for $2,000 a month, and now all of a sudden I have a mortgage of $1,200 a month, that's 800 bones every month that I get to keep. Why should I care if the house is paid off in 30 versus 40 years? In fact, all I'm doing is controlling the bank's money. I'm not even trying to pay off the house, because in 5, 6, 7 years, my strategy, I'm gonna sell it anyway. I'm gonna take piles of equity, I'm gonna put them into 2 or 3 more homes. I'm gonna do the exact same thing again. So paying something off isn't normally my speed of what I'm most interested in. But let me give you one final piece of advice that I think is the most important thing for you to keep your eye on, which is if you get the opportunity to refinance and pull cash out, or do a home equity line of credit, which is free, which is really what I recommend before you actually prematurely get that lower interest rate locked in, take some equity out of your house now and buy more real estate with it. Why? Well, you've heard it. By the end of this year, I'm projecting that the national median is going to be over $500,000. And I think 2025, it's going to keep going up. It's because we have a supply-demand issue. In our nation's history, we have never been delinquent 6 million homes. And because of that great delinquency and the huge demand that we have to build a lot more real estate, it's going to put pressure on the price threshold of the market to keep increasing and going higher and higher. I believe that the price of real estate over the next 5 to 10 years is going to keep pushing higher, higher, and higher. We will eventually move to a crash. But do you know when that happens? When you run out of inventory. And so just follow me, because when I start liquidating everything, that's because the prices are astronomically continuing to shoot up and Kris Krohn's getting out. And it seems opposite of what he should be doing, but that's how a real investor plays the game. When everyone's getting out, they're getting in. When everyone's getting in, they're getting out. Bottom line is, if you want to get a game plan, you can just shoot me a text, or there is a link below this video where you can click the link, fill out some information, say, I want to talk to Kris's #1 expert that he's trained up, and give me a personal game plan. If Kris were in my shoes, what would he do? And that is my favorite game to play financially. It's where I basically say, okay, if I had your good credit or your bad credit, if I had your money or your lack of money, if I had equity in a home or if you don't even own real estate, or if you have retirement funds or you have no retirement funds, what would I do so that I could retire with millions of dollars? And if you want to know the answer to that question, click that link below, fill out the information. Let me tell you exactly what I would do, or just shoot me a text on any question that you have financially. I'll do the same thing for you. So today we talked about what is a refinance, and if we want to keep on that theme, this next video is called What is Home Equity? And it's not really just what is home equity, it's how do you use it to build wealth? If you want to know, click right here, let me show you.